Okay, we're back. This is Rand on Real Estate. I'm Greg Rand, your host on 77 WABC, broadcasting from the Small Business Authority studios. I'm here with Laura Smith. How are you?
Oh, good.
All right, so listen, my website is ownamerica.com. What we've got there is the book. You can buy Crash Boom. Actually, you can't buy it there. You can link from there to Barnes & Noble and Amazon. But as I said, Barnes & Noble is the only place you can get it right now because Amazon is sold out, which is so awesome. I can't even believe it.
And how much is the book?
The book is, I don't know, 20. I think it's $16 plus shipping on those sites.
And you give tips about how people can invest in the market.
I tell them soup to nuts, starting with understanding why this point in history is so incredible in terms of an opportunity because of the big picture moving plates of earth. Okay, the trends of population, the trends of economics. If you buy into the idea that we've got an unprecedented economic crisis since way back in the Great Depression, then I show you what happened after the Great Depression. Hint, hints. 75 years of straight real estate appreciation. And the people that had the courage and the guts to see past the crisis before it actually officially ended did really well. So the book is, you're going to enjoy it. It's an easy read, and you're going to learn something that chances are you've always wanted to know about, which is the ins and outs of real estate as an asset class. And I'm not a geek. I explain it in fun terms. But we have a couple of calls that came in, so let's jump on with that. Colleen from Long Island, how are you?
I'm good. How are you? Thank you so much for taking my call. I need some good advice.
Okay, it's my pleasure. What's going on?
About 5 years ago, I think it was around 2005, October, my husband and I purchased a second home in the same town that we presently live in.
Okay.
And we paid $630,000 for this house. Our intentions were to move into it eventually because it was a ranch and we're older and my husband has bad knees. And we've decided over the past few years that we don't want to live in it. We want to stay where we are. We don't want to go through fixing it up and changing it.
Okay.
But now I don't even know if I could sell the house for $530,000.
So you have a mortgage on it?
Yes.
Okay. Is that mortgage over the $530 that you think it's worth?
No, but we took a home. We have a line of credit with our present home, so
Right.
we took a line of credit and a mortgage of $350 on that house to pay for the house.
Okay.
So
now, can you rent the house out now to somebody just to be?
Rent it out, yes.
It's rented out. Good. Okay. Are you covering your expenses right now?
No, I'm $600 a month in the hole.
Okay. Now, is that an annual lease that you have with the tenant?
Yes, I'm doing it year to year because I want to sell the house and I don't want to make a commitment that I can't keep. But every time I think I'm going to sell the house, the market gets worse and worse.
Okay. Well, you know what? A couple of things. Number one is that if you can hold for a couple more years, things are going to be significantly better in the next couple of years. And maybe not in terms of home prices on the stats that you hear in the newspaper. They may not change that much between now and then. But what's going to change is that the confidence level is going to come back a little bit. Right now, the buyers know the sellers are desperate. That's the worst possible time to be a seller, when the buyers know that sellers are desperate. Buyers right now are confident to the point of being cocky. And when there's a negotiating stance that is that lopsided, if you could avoid being on the losing end of that, what's going to happen over the next 2 years is that this recession is going to get into the rearview mirror over the next couple of years. I can't tell you exactly when, but you can already feel it happening, okay? As soon as we get sort of a sense that, okay, prices have bottomed out on real estate, the stock market is going okay, the overall economy is going better, unemployment is ticking down a little tiny bit every month right now. So within a couple of years, even if home prices haven't moved yet, you're going to be in a position where buyers are going to not be so confident. And it sounds like the place you bought is in a pretty desirable location. If you were thinking, you called it a second home, is it in a place that's like near the water?
Yes, it's like, well, it's not right on the water, but it's walkable. It's like I would say an eighth of a mile.
All right, that's awesome. All right, so if you can, a couple of things. You right now are losing a significant amount of money every month, and that stinks, and you'd like to be able to remedy that. You mentioned that you kind of lost interest in fixing it up. So is the place in lousy shape right now?
It's not in lousy shape, but it needs updating. Because
you might be in a position, if you have any cash on the side, right now what you're getting for rent is completely connected with the kind of condition the place is in. So if you decided to go out there and look and say, okay, if we had, let's say $10,000, if we had $10,000 to invest, what would be the smartest way to invest that money where we could then, when the lease is renewed, we can take that $600 a month gap and squeeze it down to maybe $250 a month or $300 a month just to make that negative cash flow a little bit more manageable. And that money that you're investing, I need you to think about it as investing. It's not like don't think of it like I'm throwing money away. I'm the money pit. Just get that out of your mind. You're making an investment to be able to increase the rent you can charge for the place, to close that gap on the negative cash flow, to give yourself a little bit more staying power. Because literally 2 years from now, 1 year from now is better than today. 2 years from now is better than that. And if you can hang on for 3 or 4, you're going to find that you'll be in a position, because of the location of what you bought, probably to get the buyers maybe fighting over it again. It is not unusual, even today, for places that have something special like a phenomenal location to get those buyers, if they're hot on it, to chase the property. So anything you can do to give yourself staying power now, that's the point.
What do you think the interest rates will be, though, then?
On the more, I think interest rates are going to stay someplace in the 6s. If they stay below 7, I'm not worried about that. We've all gotten addicted to this idea of like 4.5%. That's ludicrous. Okay. That's another one of those never should have happened things. Just like 15% annual increases in home prices that we had back in 2004 never should have happened. 4.5% mortgage rates aren't realistic. 6.5 is where I think it'll be, only because every time the rates try to get any place higher than that, the government turns those dials and pushes it down, because they know, and everybody knows, that home ownership is really the most important marketplace in America. And this last crisis really illustrated that. So, Colleen, thank you. I hope that you have the ability to hold on to that property, because you loved it at one point, and I don't want to see it be a bad investment purely because of the timing. So give yourself some staying power, okay?
Mm-hmm. Greatly appreciate your advice, because I respect you a lot, and it makes my stomach turn a little less.
Okay, good. So buy the book, and it'll give you some more confidence that your timing, if you can give yourself a little time, you'll be in good shape. Thank you, Colleen. Okay, we have another call from Queens. Hey, John, how you doing?
How you doing? It's a couple of questions. I've been always interested in the real estate market and all that. I was actually in mortgages for a while, and during the boom, and of course, we weren't one of those banks that gave out those nasty loans, but we ended up still closing. But my question is this: how do you get into the real estate market now? In the sense of, this is a good time, but it's a bad time because you can't get loans easily, and my credit right now is shot because of the income situation I'm in. What's the future? How do you get into this market?
All right. First thing I want you to do is have a very long-term view on this thing. Look at this as a 15-year play that you want to make. You want to ride this wave all the way out to the next crest, and so give at least a 10-year view, maybe a 15-year view. And the reason is there's no such thing as bad credit, no money down real estate investing. Okay, right. I made a reference in the first segment about how there's a bunch of clowns on TV trying to sell you a program like that.
And I've owned all of them.
Yeah, and you know what? And they're also the same kind of people are trying to sell you the ab cruncher that gives you 6-pack abs with 1 minute a day, or put this cream on your face and you'll erase years off your life, right. All right? Doesn't work. Neither does no money down, no credit in investing. So the truth is that what you want to do is, again, give yourself a couple of years and concentrate over the next couple of years on repairing the credit and socking the money away, because banks have long memories, and they're not going to forget about their mistake of giving down low down payment investment loans. That was the craziest thing they ever did. Investors, you have to put down 25% or 30%. It's always been that way, and the banks always knew that, because they know that if you can only pay one mortgage, you're going to pay the one that you live in because you live in it, and you're going to forego the one that you're making as an investment. And so they need to have buyers have skin in the game. They know that. They're not likely to forget about that again for the next 50 years, given the agony they're going through right now. So shake off that idea of being able to, anybody that would extend your credit if your credit is damaged right now is going to be giving you a short-term, high-interest, and probably a fairly risky loan, which means that you have to refinance it again within the next 5 years, and that puts you over a barrel. So take your time, John. Get the coffee can, put $10 in it, do it every day, save money, and put yourself in a position to be able to do it right with a healthy down payment in a few years.
What about these lease option to buy, that kind of thing? Because I've seen those in the papers, like in Pennsylvania and places like that.
All right, you know what? I'm glad you asked that. I'm going to jump after the break and talk about that lease option stuff, because that's one of those third rail, sounds really good, too good to be true, 6-minute abs nonsense that I would also avoid. So thank you for the call, John. I think we have a break coming up.
He wants to know where to get your book.
The book. Go to ownamerica.com. You'll see the book on the homepage. You'll see the book on every page. And the links are there to Barnes & Noble and Amazon. And you can go to the local bookstore, but that's probably the easiest way to get it is on the website.
Ownamerica.com.
Okay,
awesome.
You're listening to Rand on Real Estate. I'm Greg Rand, 77 WABC. Keep the calls coming, 800-848-9222. When we get back, we're going to talk to a gentleman who's doing this professionally for many years and get some of his insights. Back in a minute.